but I'm joined by Richard Pearce, sorry. And Richard is working on a project in Brazil and recently signed an MOU, an offtake agreement for his graphite. So Richard, I'm really excited to hear what you're saying and learn more about the project in Brazil. Thanks so much for joining us.
Thanks for the intro. Hear me okay?
Yeah, sound good.
Fantastic. I'd like to thank Kai and the Soar team for the opportunity to present to you today the Santa Cruz Graphite Project in Brazil. This truly is a fundamental value play in one of the premier battery metals jurisdictions anywhere in the world. So why Southstar? Why is this a good investment opportunity? Why would anybody want to invest in it? I'll just walk you through a couple of what I believe are strong highlights. Number one, and certainly one of the most important things, is fully permitted, fully licensed, construction ready. So we received our final license basically on December 31st of 2020. And since then, really kind of moving it forward. So our goals are basically construction begins in Q4 of 2021, 12-month construction and commissioning schedule, commercial production slated for Q4 of 2022. And I think also different than most of our other peer group out there, we're going into production in basically a very low risk, two-phased production schedule. So phase one is a 5,000 ton per year concentrate pilot plant, approximate $8 million CapEx. Phase two in the PFS is conceived as a 25,000 ton per year concentrate plant, $27 million CapEx. So combined phase one, phase two is about a $35 million CapEx. And I like this approach really for a couple of reasons. One is it recognizes truly how the commercial markets work for battery metals, but certainly graphite specifically. It's a great way in terms of risk management to get into production for a fairly modest CapEx, work through the kinks, really get to know your ore body, and just as importantly, develop those important commercial relationships that are essential to being profitable in the industrial metal space. So it takes anywhere between 12 to 18 months to get your material qualified for some of these higher value add uses like lithium ion batteries, Teslas, Fords, et cetera, of the world. And you start off with a couple kilos, and then you go to a ton, then you send them 5 tons, and then you send them 20 tons. So what they're really looking for is high quality product that can be supplied for decades, that's very consistent in terms of being able to meet their QA, QC, their specs, et cetera. So it's not like you turn the plant on, you start pumping product out, and you can find a home for it. You know, a pound of copper is a pound of copper, an ounce of gold is an ounce of gold. Graphite is a little bit more nuanced. So from a risk management standpoint, I really like this approach. And in terms of being able to intelligently allocate capital, again, I think this is a really smart way to do it. Phase two is likely to be upsized to somewhere between 35, maybe 40,000 tons per year, but it'll truly be sized based on take or pay sorts of relationships, firm commercial pricing, real market conditions, as opposed to turning the geos loose on trying to maximize NPV and IRR. So again, we're looking at phase two, but it really be sized based on market conditions. So I think this is a fantastic way to allocate capital intelligently and make sure you're profitable, don't have a bunch of excess capacity or product chasing places to put it. The deposit itself is extremely high quality, premium large flake deposit. Approximately 63% of the ore body is classified as plus 80 mesh, which makes it principally a large and jumbo flake deposit. Extremely high purity, very low contaminant levels. It's easy to concentrate. In general, it's a fantastic, compelling valuation opportunity with a re-rating where you basically go from production or from development into production. What happens many times is you get a nice bump in share price. So it's a fantastic opportunity in the short term of going from a development project that's slated to get moving into production. I can't think of a better time really to have a queued up construction ready project in the graphite space in the last decade. I think there's a real supply demand perfect storm coming, and we feel fantastic about basically having a production ready project that's ultimately scalable, getting ready to really start being able to put product into the marketplace. And finally, I think another thing that's a strong differentiator between us and many of the other companies in our peer group is that we truly are mine builders and mine operators. My company basically has found mines, takes them from an idea, works them through the development phase, the study phases, gets them through construction, into production and operations. We've done this before. We're really good at it. We're very experienced at it. So I think that's another key differentiator on being able to make sure when you look at these things, we understand what our mining costs are, our labor costs are, our power costs, et cetera, et cetera. We're very comfortable with our CapEx, OpEx. So again, fantastic group of individuals we've been working with, very experienced. Just kind of walk you through the project at a glance. 15 million tons basically in resource at a 2.3% grade. Most of that converted over into reserve, so 2.3 million tons at a 2.4. Our first year's operation, I think, will be at around a 3.4% grade. So good grade. This is very consistent with the other Brazilian operations, which have been profitable for 80 plus years. They've been in production for 80 plus years. So this is very consistent grade with most of the other deposits in Brazil. It's a fantastic geologic potential. We have 13 claims, over 13,000 hectares of area. We're playing on just under 5% of the total land package. They've got a 7.5 kilometer strike that we've really been focused on. We're basically open at depth, open in both directions. It's just a fantastic geologic potential. We're looking at drilling and exploring in 2021, as well as in 2022, looking to really upsize significantly the resources and reserves, extend the mine life, and we have 10 to 15 drill ready targets. I was working with the geos this morning, basically looking at targets and laying out the exploration program for this year. So very large geologic potential. And we basically completed a pre-feasibility study, including the detailed design of the phase one in 2020. We last updated our pricing basically at the end of 2020. So again, very simple operations, very robust financial metrics, $81 million NPV, 35% after-tax IRR, 4-year payback from the start of construction, so 3-year payback from basically the start of production. Our OpEx will basically be $400 a ton, so that puts us in the first quartile. We will be extremely profitable on phase one. Just to give you an idea, it's basically $6.5 million in revenue for phase one. After tax cash profits is basically $3.4 million. So I think we're extremely profitable on phase one and even more so on phase two. So very robust financial metrics. The ore deposit itself, the concentrate, has been fully tested. We ran 30 tons through a full pilot plant. Again, it's a world-class large flake deposit. There's not a lot of projects out there that have similar sorts of characteristics. We've signed 2 offtake agreements. One is 4,000 tons over 4 years with an European industrial partner. We signed a 20,000 ton over 5-year agreement with a US industrial partner. Again, shows very strong demand for the high quality products that we'll be generating. We have an ongoing advanced metals testing program. We've had good results published. We recently put out expandable graphite, extremely positive expandable graphite results. We started off purifying with a traditional sort of acid wash where you take con, and con can be anywhere between 80 to 97% Cg. And then for battery metals and some other value add, you want to increase that even further. So we started off with a traditional sort of acid wash. We got 99.94, 95, which is very consistent with what's needed for lithium-ion batteries, EVs, et cetera. Then about a year ago, we pivoted to a thermal approach and got truly exceptional results. We got a 99.9993. Again, it opened up a world of sectors and markets to us for extremely high value add product. Pricing can range anywhere between $10,000 all the way up to $40,000 a ton. So this was fantastic results. This week, we should be putting out coated SPG results. We will be building shortly thereafter, basically a coin battery cell and going through a long cycle testing program. So again, that's an ongoing program that we have we'll be putting out results here shortly. So very high quality material coming out of the ore. It's easy to purify. It's easy to concentrate, very low impurities. Project itself is construction ready, as I mentioned, and it's been basically fully de-risked. Brazil is a fantastic mining jurisdiction. It's the third most important jurisdiction in the world as it relates to battery metals. It's behind only China and Australia currently. And Brazil is the second largest continuous graphite producer anywhere in the world. It's been producing graphite for 80 plus years. There's a large internal demand for graphite con to the tune of about 80, 90,000 tons a year. The world markets like Brazilian graphite. They understand Brazilian graphite and they want more Brazilian graphite. In terms of operations, it's pretty simple. It's open pit mining. It's an oxide ore deposit. There's no drilling or blasting. It's at surface mineralization, very low strip ratio. So the mining is very easy. We're on strike from another Brazilian operation. So it's a very similar geologic context. We have a simple proven flow sheet that's been used several times throughout Brazil and in fact in the world, with one important difference. We won't be using traditional tailings, slurry tailings, or have a tailings dam. We're basically using filter tails where you take the water of the slurry, you basically have a filter cake that then gets co-disposed in with your waste rock facility and the water recirculates. In terms of infrastructure, again, I don't know another project that has the similar sorts of infrastructure that we're able to take advantage. We're 1.3 kilometers off a paved multi-lane federal highway. We have a graded gravel road right to site. The substation is a couple of kilometers away. The gas pipeline is a couple of kilometers away. We'll be providing water on site, basically from wells. We're 90 kilometers from a logistics standpoint. We're 90 kilometers away from an international airport. We're 270 kilometers away from Ilhéus, which is a major port facility. We're 500 kilometers away from one of the main container ports in Brazil, in Vitória. And with regards to the major industrial centers in Brazil, we're an easy day's drive on paved federal highways to Salvador, Belo Horizonte, São Paulo, et cetera. So for us to get product to market, both internally as well as externally, extremely favorable logistics. So the project has basically been de-risked except for execution risk. And really that's where a very experienced management team that's done this before and is really focused on time, on budget delivery, gives investors a lot of comfort. It also gives the shareholders a lot of comfort. As far as the schedule goes, again, as I briefly mentioned, what we're shooting for is getting contractors mobilized in August, September. Construction basically begins in September, 12-month construction and commissioning schedule, so that we're basically in commercial production in Q4 of 2022. In the PFS, we basically had about 2 years, 2.5 years between phase one, phase two. The board has basically authorized me to move as quickly as possible on phase two. So we're trying to basically cut a year off of that schedule and get it in production as quickly as possible. So we've already started the studies and we're moving as quickly as possible to get that to the point where we can actually make a capital allocation decision on it. I truly believe we're in for a perfect storm as it relates to supply and demand. And in my humble opinion, I think graphite is the best positioned metal to take advantage of this perfect storm as it relates to the critical battery metals. It's number one in terms of percent growth. It's number two in terms of total tonnages. So I think it truly is positioned to take advantage of the moment. Currently, there's about 1 million tons of demand worldwide for graphite concentrate. That's expected to double basically by 2025 to 2 million tons. That's expected to double again, basically to 4 million tons by 2030. And as I mentioned, Brazil itself has a large internal demand. So in comparison to many other jurisdictions, we can sell a good portion into Brazil and we can export it. But what does that mean in practice, basically, for the industry? And basically, that means at a minimum, 10 to 15 new mines have to come online between now and 2025. And that basically has to double again by 2030. So it's a fantastic opportunity to basically have a queued up construction ready project, getting ready to basically start putting product into the marketplace. And it truly is
I do have to stop you there, Richard. We are out of time. I really appreciate your presentation, especially the market commentary at the end as well. Puts a lot of things into perspective.
Sure.
We do have one question in the chat about your offtake agreements, if there were any upfront payments. And I looked at the press release as well. It's quite cryptic on the numbers. So if you could give us some more color on that and what that looks like, that'd be really would be highly appreciated. Maybe just answer in the chat real quick, and we can have a discussion going there as well.
So there's no upfront payments. Again, the graphite space and certainly battery metals in general is a little bit immature compared to many of the other markets. As far as I know, no companies have really provided upfront capital for investment in a commercial agreement later on. But in our case, there's no upfront payments associated with it. And in terms of the commercial conditions, again, because of the relationships and competitive nature of the market, we're not able to publish kind of details associated with the agreements. But obviously, if someone's interested and we sign a CA, then obviously I can provide more detail with it.
Okay, one last question. For benchmark pricing, when you price your product, what do you use? Where do you go?
For pricing, basically, I think benchmark is a good place to start. It's not something that I would really use to kind of negotiate firm commercial terms on. Again, our commercial folks are very experienced, 30 plus years in the industry. So you really have to have good experienced folks that have been doing this for a long time, understand where you create value, and are able to kind of get the best pricing available.
Fantastic.
But benchmark's a good place to start, and that's what everybody uses in the study. So we've done something similar.
Great. Richard, it's great catching up with you. Thanks for joining us this morning. We do have to move on the program. Really appreciate you joining us. And I see a couple more questions in the chat for you as well. So please don't just drop off. If you could get to those, that'd be fantastic. Thanks so much. Thank you.